Welcome to day 4 of the Combine. This is a review of what I did here today, 26th of January 2017. It's a Thursday, 4 days into this Combine, 4 days into this method. Still got a terrible cough, but we got up anyway. Here is 7 o'clock. For those who are wondering, I choose 7 o'clock here because that's 6 a.m. in London, and that's when the traders get to their desk. And as you can see, if you eyeball the volume, you'll notice that it increases from around about 7. It's not an exact science. Okay, this doesn't want to work. Yeah, it's not an exact science, but you can see the increase in volume roughly from 7 o'clock, 7:30, 6:30ish here. So that's my reason for that. I did get here at the desk for 7, but I think, like when you have a job and you go and your boss says get to work 5 minutes before your shift starts, nobody likes that, but that's because you need to get your mind in gear. And so Monday and Tuesday I didn't get up at all at 7 o'clock, and I missed an opportunity on Tuesday. Wednesday I did, and if you've watched yesterday's video, day 3 of the Combine, you'll know that it was just destined to be a losing day. And then again here today, we have a trade that occurred 10 minutes past 7. If I zoom in a bit here, 10 minutes past 7, excuse me, but I wasn't ready to short here for whatever reason. You know, we can get into a little bit of the technicals, but when all said and done, I just wasn't able to pull the trigger because I just rolled out of bed, and the thought process was, if I jump on this now, I'm going to regret it because I don't feel as if I've had enough chance, enough time to look at what I'm doing and look at the anchor chart and see if I'm doing the right thing or not. So from now on, I'm going to need to, and I've written it down here, points for review. I'm going to need to be ready for the allotted time, number 2 here. So that for me means being at my desk maybe as early as 6:30, getting a cup of tea and stretching, and make sure I'm awake and cognizant and know what I'm doing by 7 o'clock, rather than rolling up to the desk at 7 and missing trades that come soon after. Had this trade have occurred half an hour later, I'm confident I would have entered, and I just need to be ready. So that's one of the points. The other point for review that you can see here is the 21 EMA, exponential moving average, on the 13-minute chart, which is my backdrop chart off screen to the right here. Does it provide value? Because I've noticed that I'm going against the perceived value of that moving average. I tried to use it when I did backtesting. I tried to use it in a very mechanical way, but in real life trading, it's just not working that way. Where I can see when I need to fade the move, fade the trade I'm looking to take. So say, for example, I'm looking to, let me just bring the chart over because that will be easier. Let's say, for example here, let's say I'm looking for a short off of the 13 EMA. Well, down here there were some other compelling reasons to fade the move up to the trade that I wanted to take. But because that went against my rules, I had some difficulty in taking that trade, but I'll get to that in a second. So points for review, 21 EMA, I'm going to look at that at the weekend. Being ready, this is the main thing I need to fix if I'm to make some headway in this Combine and in my trading in general. Being ready for the allotted time. That doesn't mean getting there on time, you got to get there before your time. So as you can see, if I had traded this, I would have added around here and I would have been out at 811 for my $300, which again just so happens to be around the Fibonacci extension. And the reason why that happens a lot is because I strategically add in based on price action and where I need the blended entry to be in order to coincide with the excuse me, to coincide with the fib extensions. So that's that. Then the trade I did eventually take, which had a few things, it had some things going against it, such as news. It was a 2-star news event, but it made me a little nervous. That, combined with the fact that I had missed my opportunity earlier in the day, meant that I wasn't prepared to scale in, even though, again, if this were my first trade of the day, I would have scaled in and I'd have made between $300 to $425 on that trade. So let's walk through what I did there. The zone of action was round about here, 56. So that's where I entered on a change of polarity. I needed to see a trap under this number around, where are we? Around 55 and a half is the line. 55 and a half, 55. And I needed to see a move down through that, and then a change in polarity, as I always talk about. So here's the break. Small bars beforehand, big drop and big volume through that level, so fair enough. Now I'm looking for bars, candles, which suggest that that level it fell through is going to hold, and you see that here with this wick. And then boom, big green bar up, which negates this shooting star against the resistance area, even if the resistance is down here, but it's a resistance zone, not an exact price. Then it comes back, shows wicks on the other side. I get in, the stop holds. I got out here on the 13 EMA after a sharp move up. Not on the news, but some minutes after the news. The news came out 2:30, and it made that move like 2 minutes later, 2-3 minutes later. So that was the reason why I got out. But again, this is emotional trading to some extent, in the sense that I had a knock-on effect of errors. I had the error this morning where I didn't essentially, I wasn't awake to get into the trade. I wasn't fully ready and cognizant of what I wanted to do. So I missed that $300 there. And because I know that, I was reluctant to scale into this one lest it become a loser as well. So this is kind of, imagine a car, you go off course. If you've ever been taught, if you know how to drive, and you've ever been taught how to deal with yourself in a slide, if you're on the road and the road's wet and you slide, the worst thing you can do is turn sharply the other way. So if you're sliding to the right like this, the worst thing you can do is turn the steering wheel hard right to try to rebalance the car, because then you go into a spin. What you actually have to do is turn a little bit to the right and then to the left. So to relate that to this trading, rather than go balls to the wall and scale in here and then mess the trade up or lose just because the market rolls over, I had to bring myself back to center by taking a smaller win. So sometimes you need to push the trade, other times you need to take corrective measures for mistakes you made before, and then get back on track. So that's my philosophy anyway, and that's what helps me, because I knew if I scaled in here and this didn't go to target, and it did, but that's not the point. If I scaled in and I took a loss here, I'd be pissed after what happened this morning. So it's a small corrective measure, and then I can get up tomorrow and get back on track. So as I said, I got into this trade here because of the change in polarity. The target was 80, and if we look up here for this text that I've written up here, I said to myself, always allow wiggle room, which is something I was introduced to when I took my first course in trading back in 2006 with Win Investing. Always allow wiggle room for targets. Had 80 as a target, which is bang on the target where you see this arrow, as that's what I needed to make my $300 from the entry here at 56. So we need to be aware of that and um, add a buffer, like take some off of that target. Avoid trying to hit whole numbers, targets, and things like that, and just trade the chart. So with that in mind, I moved it down to 79 quite reluctantly, and it only got to 78. In all honesty, I should have moved it down at least 2 ticks. I usually do give 2 ticks of wiggle room. It depends on the size of the trade, the size of the run up, but for a move from here up to there, you can see for all intents and purposes it actually did air kiss this target. So we have to watch out for things like that as well. So all said and done, I did the right thing today, but I just wanted to flag or make public some of the errors I see creeping in, and namely is getting up on time. So at the weekend I'll look at the 21 EMA, but for now my main task is to be here ready at 6:30 in the morning. So is there anything else I wanted to say? Yeah, I just wanted to mention as well that I happen to be one of the luckiest traders in the world, in the sense that I live next to this guy. I don't know if any of you know him, but he is the only 4-time trading world champion. He won the world championship for trading in 2008, 9, 10, and 12. And he lives not quite up the road from me, about 40 kilometers up the road from me, which is quite far, but here in Italy, everything's far away. And I happen to live next to this guy, and I'm doing some, as we live in Italy, and I'm not bilingual, but I speak Italian fluently, and obviously I speak English, I hope, still, after being here 9 years. And he's hired me to translate some of his stuff on his site. So in exchange, I've taken a reduced rate for the translation, and he's given me access to this course, Trading Systems Supremacy. So I'm hoping to make use of that in what I'm doing and make things more concrete and mechanical in my own trading. But enough of this review, because I've yabbered on longer than I was going to. If you like these sort of things, don't forget to subscribe, like it, the video, follow me, and please, I'm enjoying the questions and comments as well in the comments section. So it's always good to share some banter with like-minded people. So that's it for now. Catch you tomorrow.